Right, good afternoon, everybody. My name's Arun, and today I'm going to be talking to you about saving a bit of money, saving a bit of tax, and some time perhaps in your dental practice in 2022. Now, we're going through a period of significant change in this sector, and so having 20 years of grey-headed experience, I can certainly give you my experience, tips, mistakes that I've made, but other clinics I think have made, and I can certainly give you some ideas of how to save some money. So without further ado, I will move this forward. I'm the owner and CEO of Samera Business Advisors. We're on stand E73 if you want to come and have a chat later on with any of the team. I also own dental practices called the Tree Dental Group, which are based here in London and Surrey. And I'm an accountant, my wife's a dentist, and that's how I got into the arena. So we've made every mistake possible out there. So you can talk to me about those mistakes a little bit later. I'm a trained chartered accountant with PricewaterhouseCoopers, again, a long time ago, worked in banking, married a dentist, and the rest is history. So if I crack on, one quick thing I want you to do today, if you get a chance, is to, if you want a copy of these slides, actually any of the slides of the team, okay, you can text to this number, 82228, and we're donating £5 for every download of the slides to the Ukraine DEC. Okay, so please do. Happy to pay £5 at least per download. Okay, to those people. So, without further ado. Right, we're in a perfect storm, okay? A lot has changed, a lot has happened. We've had COVID-19, we've all been through that, we've all lived through that. We've now got a war, sadly, as I just mentioned, inflation, energy rises, tax rises due to COVID-19, and over the next 12 months, national insurance rises are rising, no energy caps, a possible recession. It's sounding bleakish, okay? But my objective today is to try and get across some of the things that you can do to help you minimize the impact of these things here. So I'm going to start with three areas. I've got money saving tips, I've got tax tips, and then a little bit on how to be a bit more efficient in how you run your business on a financial perspective. So firstly, the question you have to ask yourself, why would you want to save money? Okay? Well, why do you want to save costs? Well, obviously, you want to increase your profit. But that's important, but every year I get clients coming to me saying, my profits are rising, but my tax bill is rising. Okay? And my money, I'm getting more money, but I have to pay more tax. God, it's just a never-ending thing. However, one of the really important things to think is, in this marketplace, the higher the profits you are of your business, the higher the valuation of your business is. So if your profit is 100 grand, okay, and you can turn it to 150,000 pounds, the value of your business will go up higher, not just by 50,000 pounds, but by a multiple, Now, what is that multiple? And I'll come on to that in a second. But so it's important to think, how can you run this more efficiently, save more money, and that will have an impact on the value of your business when you come to sell it. So some very basic numbers here, and I'm just giving a very kind of basic outline here. If you look at a practice, it's turning over £1 million, its costs are 850, EBITDA, for those who don't know, it's earnings before interest, tax, depreciation, and amortization, I'm trying to talk too quickly. What it highlights is that practice is earning £150,000, okay, in cash. Now, if you cut your costs by 10%, the EBITDA goes up to 265. Now, in the current marketplace, I've been quite generous here, the profit increases by about 56%, a lot of money. But what does that actually mean in terms of valuation? Okay, if I'm applying a multiple of 6 times in this scenario, an original valuation, 150 times 6 was 900 grand, but if I have my new profit, new EBITDA, 6 times 235 is 1.4 million, okay? So what I'm trying to highlight here is every bit of pound that you can save to increase your EBITDA, the more you're going to get for actually when you do sell your business. Now, multiples are changing and they're going up and down, but if I have to be honest, there's such a shortage of a supply of good practices that groups, corporates, mini corporates, individuals are paying more and more money for practices, paying higher multiples, and I suppose there's the opportunity to get a better price when you exit. That's the key thing. That's the key thing. So in saying all that, you're trying to get the valuation up. You have to then think, well, where can I save money? So these are a range of numbers. I won't go into detail here, but that's a typical average practice in the UK, 400 odd grand in turnover. Lab bills are 7%, material costs 7-8%, these types of costs. But we then have to think, where can we save money? So the main areas where you can save money are in perhaps staff costs, associate costs, overheads, material costs. So these are areas that you can all save money. So you have to look at your P&L and go down line by line and think, where can I save money in my practice? So I'm just going to go through a few little areas that I'm going to highlight firstly. So the first one I'm going to talk about is finance. Now, if you go to a bank, you borrow money and you set up a practice and you might have borrowed at 4%, 4.5% to start up a practice. Now, once that practice is set up and running, and say you might have accounts for 2 years, I was just talking to a client about it just a moment ago, now is the time that they've got an established business, they can now probably refinance down to 2.5%, 3%. Dan's our finance guy at the back there, so give Dan a wave, okay? So you can certainly knock and save money on your finance. So it's important to refinance. It's no point saying that you've got a loan for 20 years. A lot of the time you can actually change that and bring down those costs. So finance is certainly one area you want to look at, getting the best deal. Dan, Nigel, and the team are the people to talk to you about that. Business rates, another area. Now, the revaluation was delayed to 2023 because of COVID, and it's based on 2021 rents. So if you've got a practice, okay, it's important that you get your rates revalued, okay? If you're thinking of selling, now's a good time. In 2023, you want to get your rates revalued. Get a ratings officer, ratings company to help you, because rents of values have fallen, okay, and therefore your rateable value would have fallen, and therefore the rates payable should have fallen as well, okay? It might not cost you anything, but get that explored. That's an area to look into. Staff, the hardest thing in any business. Sadly, we're in a difficult situation where we're trying to save money on staff, but it's difficult to get good staff. Hiring the first time is never easy. In my own business and other businesses I've owned, it's a difficult thing, but negotiate recruitment fees, negotiate with agencies, negotiate all of these things in advance. And when you hire staff, obviously give a decent salary, but you want to see performance. If they can deliver on performance and they're doing well, you then reward them better. And that's an important aspect of any team. Not really necessarily cost saving, but you can then measure, and it's performance-related pay. Associate pay. So another area, in my wife's clinics, over the years, we've paid a whole range of associate pay rates, from 35% to 50%, depending on their experience. Lab bills are all split at 50%, but it's down to the associate to actually prove to us that they can generate the income for us in our practices, okay? So, and that goes back to pricing of your services. So would you rather have 40% of 1,000 or 50% of 750? So if we can charge £1,000 for a service and they're getting 40%, they're still going to get more than 50% of 750. Okay, so it's important to think and look at your business model. Can I change my associate costs? Can I change the percentage I'm paying? So it's important, and I know we've had loads of associates through the years come to our practice and say, "Oh, you're not paying me 50%. I'm not going to work here." But when we do the maths and show them our fees are at this level, they'll say, "Okay, maybe it will work." And at the end of the day, sometimes they join and they do very well out of it. So think about associate costs. Digitization. Again, an area that I know lots and lots of practices are looking at. It will save you time, be efficient. Lab bills, impression costs will be lower. You can do a lot. You can create your own mini lab in your own practice, which we've done in our own practice, or the whole workflow is there. And it's a no-brainer, okay? This is where the future's going. I'm no clinician, but I just see the clinicians in our practice use it very, very effectively, saving money, more efficiency, more throughput of patients, more higher ticket items and dentistry going through the practice. Stock ordering side of things, again, we have our team, our nurses have a stock ordering system in place. They try to have a target. We say, this is how much you're going to save. This is how we're going to try and, you're only going to spend this certain amount this month. This is how we're going to save it. And we have, that's another area you need to have incentives in place for people to keep your costs low in your practice. So this goes back to people. A lot of it goes back to people. We can all say we want to keep our costs low, but you need to have the right people in the right role, and that goes back to hiring the right people in the first place. One other area, I think we have a buying group that we have, which is the Samera Alliance, and all our buying group members buy through an online portal, and I think they save 1.5% if they're buying through the online portal, because it's cheaper, because it's online rather than paper or telephone. So there's little things make up a lot of difference. Paperless, I won't dwell on this, but again, storage for papers. I've been to clinics where there are lots and lots of records and storage facilities for paper records. That needs to go. You can save it on servers, you can put it in the cloud, and you really want to try and create a paperless practice. If you're starting up a practice, that's really important to have that paperless practice. It's an easy thing to do, okay? And it might be a culture change, but again, that will save you money. All of these things will save you money, and it's always doing all these little things which will save you money in your practice. Utility bills, again, where do you start? Sadly, prices are rising. There's no cap on utility bills in practices or in businesses. But again, essential to review your costs. And again, I will mention our buying group, and I'll talk to you about it later. Gurpreet's our manager there at the back there. You can wave at him. Again, you can look at how can I save money on my utility bills, electric, gas, all that type of thing. But you want to look at that, because these costs are going up, and they're not going to come down probably for the next 2 years. So utility bills. And I think this is a really important one. And I was talking to a client earlier today, or someone earlier today, and they were saying, oh, there's lots of chairs, dental chairs and equipment that we see here that we can buy, which are so much cheaper than the normal ones that we see here. Should I look at buying those? And I say to them, well, you could buy it, and you might save some money on it, but will you be able to get those chairs repaired? How reliable are those chairs? So it's so important to think, okay, if I buy a piece of equipment, how reliable is it? Because the most expensive thing in any dental practice is when the chair isn't working, because you're not getting any patients through the door, you're not generating any revenue, you've got fixed overheads in your practice, you're in a bit of a stum. Okay, so you need to think, buy the right equipment, get it serviced regularly, and then you'll actually, hopefully, have minimum chair downtime. Buying group, I've mentioned it. You can talk to us later, come to our stand later, Gurpreet will talk to you about it, but effectively, you can join for 2 months, totally free. We pretty much guarantee we'll save you money on your consumables, on your IT, on your technology, digital equipment, all of these things, because what we've done as a buying group, we've got scale. We've got hundreds of dental clients. We've negotiated with many of the suppliers in this room, and we've said, well, we've got all these clients, give us a better deal. Clients then buy through our buying group, they get a better deal. It's a win-win for many people. Okay, we'll talk about that later. So, tax. So I've talked about quick money saving tips. I've only got a short period that I can talk to you about today. Tax is the next area. As an accountant, this is probably the most popular question I get from dentists. How can I save more tax? I get this every year, not once, but dozens upon times, okay? So, good old Albert Einstein, he always thought it's the hardest thing to understand, and it's an increasingly more complex environment now, tax is. It's more challenging, whether you're a corporate, a sole trader, changes in national insurance, it's getting more and more complicated. But what we've seen over the years, dentists are always an easy target from HMRC. We've seen dentists get involved with, dare I say it, certain dodgy tax schemes over the years because they're trying to save some tax. And before you know it, they're getting problem upon problem, HMRC knocking on their door, and they're creating a bigger issue for themselves, okay? And dentists have always been a target for people trying to rip them off in terms of dodgy tax planning, but also a target from HMRC because dentists are high earners. So they know that if they're high earners, they're going to be trying to do something sometimes maybe that they shouldn't be doing to try and save some tax. So they've always been an easy target for HMRC. So the question I probably get second to how can I save more tax is, should I be a limited company or should I be a sole trader? And in truth, it's never that easy. It's never that easy to give a straightforward answer. There's new announcements next year. Rishi Sunak saying that corporation taxes are going to go up to 25%, which makes the benefit of being a corporate less attractive. IR35, I won't bore you on that, but that could be another issue. So it's important to look at each scenario. Everyone has a different situation, and therefore to talk to an accountant that has this experience and then looks at, should I be a sole trader, or should I be a limited company? Or should I be some other variation out there? Okay, so, but plan it right. Sorry. I think the nature is that lots of people think that a limited company will be the right thing, but in truth, a limited company will have higher charges. A company accounts, corporation tax return, other things that come with it. Okay, so look at it carefully. In terms of extracting profits, there's so many ways that you can extract profits from your company. Again, if you've got a company, there'll be dividends. You can perhaps if you own a property, you can pay yourself rental. Pension contributions is a good one to save some tax. You might have a benefit in kind, like an electric car, could be an effective way to save tax, okay, and because the benefit in kind is very low on electric cars. Salary is probably the worst way of paying yourself from a company because it attracts national insurance and the taxes are much higher. So again, I've kind of talked about this, but if you're going to take money out of a company, you're trying to get that fine balance of dividend versus salary. You'll still have to take a dividend out, but it's getting that right balance of how much you're going to take out of it as a dividend from the company. And if you have a partner working in the business or children working in the business, it's also important to utilize them, their kind of tax allowances as well, as long as they're done legitimately. One of the things that we're all kind of aware of, by 2023, Rishi Sunak said that there's a super tax deduction of 130%. So if you're buying pieces of equipment for your practice, plenty of things to buy here, you can get 130% capital allowance deduction on that type of equipment. So it's a chair, digital equipment, that type of thing, and that's available up until next March. In addition, he announced in the spring budget the other day, he's probably going to prolong this or change this or make this more attractive because he wants more people to buy equipment. Because if people invest in more equipment, that means it's going to boost the economy, and then ultimately it will grow the economy. That's his logic. Let's see if that happens. Okay. So the super tax deduction is something very much, if you're going to start up a practice or if you're going to redo your practice or invest in equipment, definitely do it before March 2023 or get the invoice at least before that date. Okay. Company pension contributions. Again, if you run a company and you are a shareholder of that company or director of that company, you can pay yourself company pension contributions from that company. That can lower the corporation tax bill of that company, which is fully allowable. So that's another way that people are using that quite effectively. Obviously, when you invest in a pension, you can't touch it until you're retired, okay? But there's ways of, I suppose, it's an effective way that many people use to reduce their corporate tax bills. Salary sacrifice. Again, I'm throwing these things out at you just to get you thinking, okay? You can talk about this in more detail for your own situation. It's an arrangement employers make available to employees. It can make your pension more attractive tax-wise. Effectively, the employer agrees to reduce the salary and the difference is paid into a company pension. So, and if you're their employee, the difference could be paid into the company pension. So, again, these are all things that you need to explore with your advisors, with your accountants, okay? Sadly, national insurance is going up by 1.25%. I can't remember now the number. And at the same time, whilst Rishi Sunak's taken that away, he's tried to be nice this week by saying he's going to raise the national insurance threshold, but still, that still doesn't compensate for the rise in national insurance, in my opinion. Okay, so in essence, there are things that you can do, but it all needs thinking, it all needs planning. And I think I have to stress as an accountant that we get these questions right at the last minute at the end of the year where you're not going to get any answer from any accountant because they're too stressed trying to file your tax returns and do everything right and get it submitted. This needs time and engagement and planning and looking at the bigger picture of what you're trying to achieve and what you're trying to do in your business. Okay, and a good accountant will sit down and plan this with you over a period of time and say, we'll do this, look at this in 6 months. Once that's right, we'll stick at the next thing in the 6 months. This is what I think you can do. And the tax laws are always, always changing. Outside of the company side, or outside of the practice, there are other things you need to be doing, though, really need to be doing. And if you're not doing it, these are easy wins, okay? You need to be using your pension allowance, which is up to 40K a year, with a lifetime limit of 1.5 million. ISAs, 20 grand you can put in an ISA, cash ISA or a shares and stocks ISA. And if you've got children, you could put £9,000 into junior ISAs as well per child. A very important thing. Every year you should be thinking, can I use my £9,000 new junior ISA for my children if you've got those funds available? Carry forward losses if you've got a business that's running and you've had losses when you started up. Make sure those losses are accounted for correctly and you're carrying them forward because they can be offset against profits in the future. Excuse me. EIS schemes, another way to invest in. They're an attractive way to potentially reduce your tax bill. They can be sometimes, you can potentially sometimes lose some money in them as well, but look at those and invest. That's another way. Using your CGT allowance. So if you're buying some shares, you might have bought Tesla shares or crypto or whatever people might be doing. Okay, make sure you're utilizing your annual allowance of $12,300 per year. Okay, totally tax-free. Use it. Okay. Charitable donations. You can get gift aid relief. Again, and electric cars. Another way to they're effective. They're tax effective for you in a company because the benefit in kind is very, very low. If you have a petrol car, the benefit in kind is huge. Electric, low. So electric cars are definitely a very tax efficient way of living. So we can help with all of that. Okay, tax planning. Again, as I said earlier, think, plan, organize, and work with different partners to help you do that. And it's not just an accountant's role. There'll be a good IFA needs to be involved. There might be a good pension advisor that needs to be involved. It's a group of people that have to get involved to plan your affairs. So, and then I suppose the last bit, it's kind of I'm going to talk about here is why it's even more important now to get your finances in order. So what we've seen over the last 2 years, we've seen many dentists do very well, okay, as a result of COVID. Particularly private practices I've seen have done very, very well, and their profits have grown and the demand for private services have grown, while some other practices are struggling, okay? And we're also seeing the government's broke. Just the Chancellor's statement this week, not really helping the people at the bottom on the bottom rung, not really being helped particularly well. So they're seeking to get more cash in, okay? That's what they need. And we're seeing more and more investigations come through tax-wise from HMRC. I think it's up by about 25% in terms of investigations this year as opposed to last year. So this is an increasing area. This is how the government's going to try and pay back for COVID and the war and everything else, is by coming after you and me, okay, to try and recoup tax. So it's important to get organised, really important to get organised. So one of the things the government has introduced, and this is happening as we speak, is something called Making Tax Digital. You might have heard on the radio QuickBooks and Xero and all these companies talking about making tax digital. But basically it's a plan that you're going to have to basically turn all your tax records into a digital format. So no more sending in those boxes of papers to your accountant. When a box arrives at my office, I think the whole team heart just sinks. It's like, oh no, not again, not that client again. But we'll leave that to the end, and they're usually done on the 31st of January, okay? Because that's going to go, that's eliminated, okay? But it requires an uptake of digital software, and it's important to work with an accountancy firm who's totally au fait with a digital platform. So in April 2024, basically, there'll be an introduction. I'll come on to that in a minute. And you'll have to be using proper compliance software. I think you might have Xero, QuickBooks, Sage, various things. All these companies have got these things out. So who's it going to affect? I think these are the numbers I got from Xero. 1.9 million self-employed businesses, 1.3 million landlords. So if you have a buy-to-let property, okay, you need to be doing it all on a tax-compliant digital piece of software, like Xero, and like 200,000 ordinary partnerships. So currently, this is how the income tax system works. We have one annual submission, which invariably happens on the 31st of January or in that week before. If you're doing it electronically, you can file it by paper by the 31st of October, and you can do paper records. However, from April 2024, under the new income tax self-assessment system with Making Tax Digital, your accountant's going to be more involved in your business, okay? Or you need to get a lot more kind of au fait with these things. So you're going to have to do 4 quarterly submissions a year for your business, an annual end of period statement, and then an annual final declaration per individual. And again, this all has to be done on software, and it's all done digitally. So if you look at that before and we look at that afterwards, it's showing that, wow, we've got the issue. I can see this already, to be brutally honest with you. As a small accountancy firm, we struggle to find accountants at the moment, okay? And the reliance on accountants going forward in 2-3 years' time is going to be even more, okay? So we're going to have to train all our clients to become more digitally savvy, use the software, and ultimately adopt a much more organized approach. So the end of year shoebox won't happen. It's going to be something like that. So, as I said earlier, it'll be sole traders and landlords from April 24. If your trades adds up to 10K, it's pushed into making tax. So if your trade is above the 10K, it's making tax digital. Partnership profits are not included. I won't dwell on that. So this is what's happened thus far in making tax digital. So you can see the timeline. So in April 22, all VAT registered. So if you're a VAT registered, dentists aren't VAT registered, but if you were a VAT registered business, okay, you would be doing making tax digital already if you had a turnover of 85 grand. Now we're in a pilot period. 24 income tax, as I've mentioned, if your profits are greater than 10K. 2025 partnerships if you've got a profit greater than 10K. And then corporation tax, which they haven't announced exactly yet, but they're talking about 2026. So literally all of our affairs, all of our tax affairs will be all electronic, and everything will have to be recorded in that instance, okay, digitally. So what does this mean for you if you're in practice? What does it actually practically mean? In a nutshell, you have to go digital, okay? And the way to do this is a variety of softwares out there, okay? The way we work, we have something called HubDoc. You might have heard of Dex, you might have heard of Receipt Bank, but basically what happens is our clients, they scan in their invoices, it goes into something called HubDoc. That HubDoc processes that information, that goes into some software, and it scans the invoice effectively. It reads the information, the amount, the name, the value. That information then gets posted into Xero, and Xero is the bookkeeping package. From that Xero bookkeeping package, that effectively then is going to that will be bookkeeped, and it'll be, once those are bookkeeped on a quarter-by-quarter basis, you can press the button on Xero, and that will then get posted to HMRC for their quarterly submissions. So that's kind of how the process is working now. The technology's all there to do it, but I can guarantee 85% of this dentists aren't using it properly at the moment. It's all very cumbersome. It's all very kind of a little bit messy at the moment. But the next 2 years, if you've got a practice, you need to start getting organised to get this in place. Get slick, get organised, because this is coming. There's no doubt about it. There's no COVID stopping it this time. It's going to happen. I've mentioned Xero. So for those of you that don't know Xero or QuickBooks, how this software works, they have your bank connects to it. You can reconcile it with quite simply with quite good transactions. It's good reporting, so you can see management information, how you're doing. So it's real time. You're actually seeing how you're doing your business. Okay, it's not looking back in the past, a year out of date accounts. You're actually seeing how I've done over the last month, over the last quarter. It's so important, and in an environment where we're living in today, where everything is moving so quickly, and today I've spoken to so many people who are doing startup practices, and I think people who are doing startup practices, it's definitely a great thing to do as a startup in this current environment, but you need to know the numbers, you need to know how things are doing, you need to be able to change your strategy if things require. You can't do it based on historic information which is 12 months out of date, okay? So important to embrace the technology. So in conclusion, on this side of things, making tax digital is coming, okay? It's essential to get organized now. This will kind of help with your financial record keeping. You'll be able to review how you're doing on your profits on a regular basis. And you can also, all your records are kind of stored in the cloud. You don't need to have reams of folders. It's all there, okay? But it's about getting organized. And so I'll give you an example. In our practices, we have, with all the suppliers now, we don't actually have invoices coming to any of our practices, like paper invoices, bar one or two little labs, okay? Everything is emailed from the likes of Rights or other engineering companies. Everything's emailed and it goes to a specific address. That address is the HubDoc account. Everything gets posted from HubDoc because it's reading all the software using OCR technology, which goes into Xero, okay? And then from Xero, we see the invoices that need to be paid, okay? We tick, 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 10 invoices, press one button, all the invoices are paid automatically because it connects to the bank, okay? Because we use something called Wise, you might have heard of Wise, with Xero, and that integrates with Xero. And we don't have to even open up our Lloyds banking app. We just pay it through Wise and it goes, okay? It's just one payment. So I don't have to faff about spending hours dealing with dozens of suppliers. I just make one payment and it goes, okay? And that's hugely time-saving. And it allows you to focus on the things that actually matter in your business, the people, the team, the marketing, the clinical work, okay? And the technology's there. It's just about embracing and understanding it, okay? The Making Tax Digital is coming. We're going to have to embrace it. We just need to adjust and absorb this type of change that's happening out there. Yeah, and I think by adopting this culture of reviewing your performance on a regular basis, you'll only start running a better business because you can see the numbers, you can change your prices, etc. So, 3 things I want you to take away from this short talk today is firstly, if you've got a practice, get your accounts and look at what 3 areas you can cut your costs in. I can guarantee there'll be 3 areas you can cut your costs in. It could be materials, it could be labs, it could be marketing, it could be anything really, okay? And contact those suppliers and shop around. It could be waste management, it could be anything. Contact suppliers, see what you can do. We do this on an annual basis in our own practices just to see. And you'd be amazed how much you can actually save on certain things, okay? In addition, I will plug it. It's our buying group, the Samera Alliance. You can join it. It's free to join for 2 months, 3 months. Try it out. 2 months. 2 months I've been told of that. For 2 months. Try it. You'll save money. If you like it, great. If you don't, no obligation. Move on. Okay? Number 2, seek help and look at how you are structured for tax purposes. And that's a really important aspect, okay? But just because your friend's doing it doesn't necessarily mean it's the right thing for you to be doing. So look and talk to people like ourselves to look at your whole portfolio. It could be your accounts. You might have a wife who works in the practice or a husband who works in the practice. You might have other business interests. You might have property. Look at the whole picture. So an example, recently we had a client who's got a few practices. We've put it under a group structure. We've got a holding company at the top. We've got properties in the PropCo company here. We've got the practices under separate entities under the dental companies. And it's a structure that's manageable. It can be organized. And the accounting is now done everything like with Xero and HubDoc, as I was talking about earlier. So it's being organized and efficient. Because what they want to do, they want to grow their business. They want to add more practices. They have to build a scalable model if they want to do that. Okay? So look at your tax structure. And number 3 is really embrace the digital accounting revolution. I know it's accountancy. I know it can be dry. I know it can be tedious. But you know what? We all have to do it. Okay? And not in 2024, in 2 years' time, you'll deal with it then. Deal with it now. I don't really want to receive any of your papers in a shoebox. And I really want you to run a better business, because it's not hard. It really isn't that hard. It's just getting a bit more organized in that respect. So last couple of slides here. We deal with hundreds of accounts for dental practices across the country, all shapes and sizes, from associates, people starting out, to people who own I don't know, dozens of practices as well. So we've got all shapes and sizes that we deal with. I'm lucky to have a fab team. I've got my colleague Gurpreet there, and I've got my colleague Dan here, the buying group and finance guys here, if you need to have a chat afterwards. And as I said, we do 500. The buying group is the area that's growing, and I can see that happening. We're getting more and more inquiries, people wanting to save money, okay? Everything is going up in cost. Therefore, we have the power together. If we work together, we have greater buying power if we can negotiate with you, more clients in it, to actually negotiate better terms with the suppliers out there. And at the same time, if you need to raise finance, you're expanding, you're buying, you're setting up, Dan's a man there in that respect as well. I've got a whole list of people there. There's more to you. I just thought I'd just put these up there if you want to do it. But you can check everything out on our samera.co.uk website. One thing that we do quite uniquely, we have we have a Calendly links, and you can book a call with the team. We have evening calls, weekend calls, all that type of stuff, because we know dentists are in surgery all day, and quite often or not, I've seen that over the years. Again, last bit of thing, if you want your slides of this presentation, I'm talking today, now, tomorrow, for anyone who wants to start up a practice. My wife, Smita, who's kind of the better looking half of me, and the clinical person, she'll be talking about how to start a successful private practice. Squats, that's her area of expertise. She's a dentist, done it, I don't know, half a dozen times successfully. And then Nigel tomorrow afternoon is also talking about, who's our head of commercial finance. He's going to be talking about how to actually raise finance on the best terms that are available. And all the slides are there if you do that. Okay. And again, £5 to the Ukraine appeal. That's it. Thank you. And if you want to have a chat to anyone, come and see us at E73. We're happy to chat, or I can happily take any questions here as well.